Hello, good day. This is the daily analysis of Ethereum and BNB tokens for Thursday, January 5th. As previously predicted, the price entered a bullish phase, and based on the confirmation we got from RSI, it entered a high potential zone, which indicates the continuation of the trend. The bullish movement is ongoing, and ultimately it broke through the order block here and entered a new zone. FWG. At this point, it finally closed below 150% of the FAG, which indicates a short-term correction in the market. It predicts that the price will have a short-term downward move. It will enter this FEG zone, and with the accumulation of liquidity in this area, it will return to the trend again. The bullish movement will continue. However, if it is accompanied by bullish momentum and closes above the FPG zone, it can continue its bullish trend. And in the 4-hour FPG zone, we should look for a trading strategy for a sell position in the market to the target of the liquidity pool zone in this area. If the trend reversal signal it can be a very important trading zone. Also, if the FBG zone is broken, it can still continue the trend. It can reach its own trend, and ultimately, highly significant zones like the 4-hour FBG in this section can act as levels of notable resistance. But by analyzing up to the 1-hour time frame, we see that the price is moving within a channel, and by analyzing the movement leg, we can observe this. Based on this movement leg, the price entered a channel, and the size of the movement leg itself suggests a continuation of the trend. It reached a bullish move, and ultimately, if it breaks the bottom of the channel during a pullback, we can target the swing low area. Here, and in the shadow area, we should look for a sell position in the market, or at the 50% level where this order block handle is located, or we can, in case of a pullback and reaching the order block area or the shadow area, we should look for a buy position in the market, targeting higher price levels, which we also see with the RSI, and entering the high potential area, which indicates the continuation of the bullish trend. This is the price movement. However, it is predicted that we will have a bearish move and a breakout, a pullback to the target area of the shadow. In this section, we can have two trading strategies. If the price is in the area of the shadow of the order block candle, it forms a trading strategy called Ryan Soldier, meaning will the price move downward? In the end, it closes within the range and by collecting liquidity heads toward the sell side point. The entry here is with the stop loss behind the swing, targeting an R of 1-to-1 or the swings in the section. If it closes lower than the range and is accompanied by bearish momentum, it can enter the range. If this candle forms and a lower shadow is created, we should look for a sign of trend weakness and eventually enter a buy position. Stop loss behind the swing, targeting RR, 1-to-1, 1-to-2, or the swings. In this section, if the price moves downward, liquidity is collected on the sell side here and then returns. Inside the range, this is a valid strategy. A soldier can also form for us here, and for the swing targets, we can set our target here. On the 4-hour time frame, we can see that a buy-side liquidity pool has formed here. If bearish momentum increases, the price could enter a bearish phase by closing below the FWG zone and the CP candle located here. However, if the price returns to the FWG BPR zone or the order block candle found here, we should look for a trading strategy for a buy position, targeting swing highs and key levels. In these areas, by analyzing the BNB symbol on the 4-hour time frame, we can see that the price is accompanied by bullish momentum, and as predicted, the buy-side liquidity pool was collected in these regions. Ultimately, the price entered the rejection block area and reacted to the 50% level of the rejection block. By analyzing the RSI, we can see that it has entered the potential node area, which indicates the continuation of the bullish trend in the market. Eventually, the price might experience a short-term correction in the market. This area could become the ATR candle zone, and ultimately, the price would continue its bullish trend. If it closes above the rejection block area, it can move upward, collecting the buy-side liquidity here, provided the price closes above. After collecting liquidity and closing within that range, we can enter a sell position, with the stop loss behind the swing and the target at a risk-reward ratio of 1-to-1, 1-to-2, or at the swing low in these areas. With increasing momentum, the price can continue its trend, its own bullish trend, continue, and eventually, with the price closing above the order block range, it can enter a bullish phase toward the profit target, a higher price, but a better prediction for the price movement could be that the liquidity target on the buy side in this section is eventually reached at the order block range, forming the swing failure pattern, from which we can take advantage of this opportunity. To reach the lower target, we can enter a sell position at a lower price, using confirmation from the RSI. We can use this method, and if a divergence forms, based on the RSI and price, we can enter a sell position in the market with a higher time frame analysis. 1 hour. We can see that in this area, the price has formed a liquidity zone on the sell side, and a divergence level is present here, which could lead to a short-term correction to the downside, towards the FVG zone in this area, or the order block zone in this section. If it reacts and momentum increases, it could move downward, and ultimately this 1 hour order block zone could be a suitable target for a buy position in the market, aligning with the target of the order block zone. On the 4 hour time frame, which has been refined to the 1 hour, right here in this area, enter a position at this point and take advantage of this trading opportunity as well. Wishing you success and lots of profit.